be able to be here with you this evening, because tonight, what we're going to do, and if we don't get through all the training tonight, this will be a part one. I believe we will be able to get through all of it tonight, but this will be a part one and a part two. But it's very, very important that you understand how to navigate through the market. It's very important that you understand what you're doing when you sit down in front of the computer. And so we want to make sure that with the Be Your Own Bank movement and what we're doing, we want to make sure that you're empowered. We want to make sure that you're in a position to win. That's what we want to do. So it's about 1 million families, 1 million families financially educated, 1 million families financially impacted. And that's where it begins with you. And so in order for us to reach 1 million families, because Be Your Own Bank is about helping you understand and teaching you how to think like a bank, act like a bank, and become your own bank. So in order for us to achieve that goal, in order for us to reach that, that means that you have to be empowered. You have to be the one to be able to sit down and execute. You actually have to become your own bank. So as we begin tonight's training, as it starts, where we start is with you saying affirmations. It's important that you have the right mindset. What goes in is what comes out. What's inside of you is what's going to pour out. So it's so very important that when you begin and you understand and you start trading, you understand that you are a master trader. You have to say it. I am a master trader. All my trades end in profit. I am the lender and not the borrower. I am a master trader. And that's the mindset you need to sit down with. That's the mindset that you need to have when it comes to trading. And so you have to sit down. And yes, I'm glad you put that in the chat. I am a master trader. All my trades end in profit. I want you to speak that. I want you to say that several times a day. I have accepted the challenge to be my own bank. If you notice one of our hashtags is hashtag BYOB challenge. That's because you've actually accepted the challenge to be your own bank. So hashtag BYOB challenge. Accept the challenge. That's why our affirmations start with I am a master trader. All my trades end in profit. And that's the mindset. If you have a clear mindset, you're viewing the charts, that's where you're going to be. So where we're going to begin today is we're talking about the BYOB cash out, right? We're talking about the BYOB cash out. Now, how do I actually have the accuracy rate that I have? You know, the 92%, where does that come from? How do I know that 8% is typically a user error, or it could be the fundamentals of the news? So that's that cushion. I've got people that's, you know, the feedback, and I'm going to give you the disclaimer that past profits don't guarantee future success. But at the same time, it's important to understand that when you look at the charts and when the accuracy is there, it's just there. So the strategy was built for BYOB cash out is built for you to be able to look at 3 confirmations and put yourself in profit. 3 confirmations, put yourself in profit, okay? So those 3 confirmations, and then you put yourself in profit, what happens is that's the 92%. But how do I take it to another level? How do I do that? You know, because like I said, a lot of this is personality driven. But you always, when you have a new trader or you have someone starting, we want to start on the lower time frames. And that's because it builds confidence. That's because it gets you comfortable with the market. Somebody that's just getting started to trade is not going to understand what you're looking at on the screen, which is support and resistance. They're not going to understand moving average. They're not going to understand trend lines. You might be advanced, right? And you might get it from day one. But the average person still has to study. But that same average person wants a return on their investment. They want to know that it works. They want to have confidence that they know how to trade. And so that's why when we begin this from the lower time frames. We begin this from the 15-minute chart. So yes, we begin the analysis. We teach the 6-minute video. All of that is done from the 15-minute chart, right? That's where that begins and that's where it starts. Now, what you're looking at, though, to help you understand the market, let's say you didn't even have let's say we didn't even have the BYOB cash out, or let's say you had to learn how to mark the charts up, or you had to figure this out on your own. What you're looking at is how you analyze trades. What you're seeing on this screen is where it begins. So one of the things that we always look at, if you've been on this call before, or if you've been on a live trading call, we want to know the trend of the market. We want to know what's happening. That's very important to understand. What is the market actually doing, right? What is the market doing? And when we understand what the market is doing, that's the trend. So I know if I'm looking for buys in certain areas. I know if I'm looking for sales in certain areas, right? So you want to understand the trend of the market. Then you want to understand your area of value. Now, what that area of value is, see, you have what's called entry triggers, right? And I'll show you in just a moment. But that area of value determines if I actually take the entry trigger. I can run across the entry trigger, and if it's not going with what I'm looking for, then I don't want to take it. So that actual entry trigger is what's going to help you understand what it is that you're looking for, right? It's going to help you understand. So now, where are we? The first thing is areas of value, which are your support and resistance lines, right? Those are support and resistance lines. And then the next thing that you're looking for is your moving average.
He's
right?
getting bit by sharks.
If we can please mute our lines. Whoever's talking about sharks, thank you. Your moving average, and then you also want to look at your trend line, right? Your trend line. So you have your 3 areas of value. Now you're not looking for all 3, you're actually looking for 1. Because that 1 is going to help you. Now you can use them collectively, you can use them all together, or you can look for 1. But areas of value is what's important for you to understand how to trade. And then when we're looking at how to properly enter the market, and then we have what's called entry triggers. Now, understanding proper execution. This is the foreign exchange market. Buying and selling at the same time. I'm buying one currency, I'm selling the other, right? That's what I'm doing. So what I'm looking for, this is just in general overall. So this is just general information, but I'm going to get more detailed. So then you look for those entry triggers, because that entry trigger has to follow you. So this is how we learn how to trade. Like I said, foreign exchange market, buy and sell currency at the same time. All I need is movement, and all I need is a proper entry and a proper exit. And that's how my trade, and that's how everything is going to end up in profit. So with that being said, what am I seeing right here? What you're actually looking at is you're looking at support and resistance lines, right? Support and resistance lines. So when we just did the last couple weeks, we talked about this heavily because these are so important. These are those little market choke points, those little market checkpoints where it's going to hold the market, right? And if you notice, when you're seeing is the market tests these lines, it always tests these lines, right? You see how it tests the line up here, it's going to test the line down here. It always tests those lines. But as we notice that when we enter it, once it breaks through, then it comes back and it retests that line. So when you're on a chart, and we're talking about drawing up support and resistance lines, which you will see when we get to the charts, but these are important to be able to identify. See, the cash out strategy is made for you to be able to just grab 10 pips and cash out. But everybody's not a scalper. Everybody does not always want to do scalping. And that's fine. Some people love scalping. That's fine too. What's your personality? Are you impatient? Are you patient? Can you let a trade sit all day, overnight till tomorrow? Do you need to be in and out of the market? What's your personality type? That's how you determine the type of trader you are. But these support and resistance lines, it's important for you to understand, and you'll be able to actually begin to see them. Because if I look across here, there's another one that will actually come in between these, like these dynamic zones, right? In between the major support and resistance. So that's what you want to be able to visualize and what you want to be able to see. So that's one area of value, because an entry trigger would tell me if I saw something and it's moving here, I'm not getting in the market right here. right? If I saw something, I'm not getting the market right here. I'm looking for it to bounce off the support line in order for it to turn around and move up. And that's when I would actually get in a trade. When I know it doesn't break through the support line, it bounces off the support line, right? It doesn't break through the support line, it bounces off the support line. And then I would know to go for a buy. So same thing with the resistance. It bounces off, it actually tests it. Now, remember, these are orders. This is the market. We ride the wave of the market, right? You got banks, all these financial institutions, the people who move the market, they're placing orders. So that's what all this stuff is, you see the stock exchange, you see all of that, that's real. And that's what they're doing. They're placing orders. They're doing those things. So this is when they're taking orders. They might take more and then they want to sell it. So this is actually what's happening right now. And so you want to make sure before you get in the trade that you have that resistance, that pop, that it bounces off, it's testing it. It just tested it real hard and it went up, but it came back down, and it tested it again and it didn't work and it didn't break through, and then it came back down. So this is why when you often hear about market execution, buy stop, sell stop, buy limit, sell limit, what you would do with this is a sell limit and a buy limit, right? Because you want it to break through, but as it always does, and you'll see this when we get to those PSARs, right? And so keep this in mind. I want you to keep PSAR in the back of your mind, but as you see, it will bounce off of these lines and then it will turn around. So I don't just want to do market execution. I don't want to just do a buy stop. What I would do in these situations is a buy limit or a sell limit, because I'm expecting it to touch this line to kind of push through it, but I'm expecting price to turn around. I'm expecting price to turn around and go back in a buy. So that actually protects you from an entry standpoint. That's what that does. Now, once again, here's another resistance line. And it's just kind of showing you how, now what you see on here is a traditional Japanese candles. It's not the BYOB cash out, but you see how when it hits those lines, the type of candle, you see in this situation, for this type of price action, you actually have to know how to identify each candle. So for those of you that like price action and BYOB challenge on the YouTube channel, for those of you all that like the Japanese candle, there is a training that talks about the Japanese candle. There is a training that talks about how you can understand how to read the candles and how to listen to what they're saying. So if you want to use Japanese candles, then go right ahead and watch that training. However, I use a lot of Hikinashi candles, right? I use a lot of Hikinashi candles because I like the trend candles. And so what we notice is they will actually tell us a lot more to me, based on what I like, and you'll see that. So this is what you're looking at right there. So that's just an example. So once again, you have another resistance line. So like I said, those are examples. Now another area of value that I have is what's called a trend line. This is the trend. So we're looking at the actual trend. And so when I'm looking at the trend, what you're seeing, and this is what you got your trend, you got your moving average, and you always have that support and resistance. And so when I'm looking at these things, what I'm looking for is for it to follow the trend. And so you got your higher high, you got your lower highs and your lower lows with this, but what you're looking for in a downtrend, or you're looking for an uptrend, but your entry trigger tells you when to get in the trade. So if you're seeing a trend and you're noticing it, a trend line will actually help you determine that that's when I would jump in for a sale, because I'll have trend continuation. And this is a perfect example about what I meant about entry triggers, because you notice that something told me to buy right here, right? Something told me to buy, but this is a correction. This is market correction. So I'm not, when I'm looking at these trends, I'm not buying right here, because you notice how even when we're doing the BYOB cash out, if we see a strong trend like this, I'm like, no, we don't want to do that one. We want to go with the direction of what the trend is doing, because these market corrections, they're not going to give you what you're looking for. You want to wait till it gets to this certain point and you want to turn around and you want to pull back, right? Here we are again. You got that dynamic support, which is that trend coming up. You notice that it moves upwards, it pulls down, See, I would not want to take a sell. That's why. So yes, these are entry triggers. These are things that's telling me I got an entry trigger. However, I have a significant uptrend, right? I have that support line moving with my significant uptrend, but look what else, look what's happening. So, and this is, you know, you're looking at that, but look what's happening. So I need to wait until I get something that tells me to turn and to take this in the upward position. Same thing again. Now, what you also see, remember I told you can get a combination. With a combination, I'm looking at my resistance and my support lines, but within that, I also see a trend, right? I see a trend. You notice that those lows and those highs, where do they hit? I got a trend that's moving upwards, and then when it turns for that correction, it hits on a trend line. It goes up, right? And it turns and it actually hits on a trend line. And same thing in opposite direction. You see that trend coming down. This is where you start seeing those trends with your eyesight, right? You can actually see them with your eyesight. And so you don't see a line right there, but what is it? The same thing, right? You know that it's not going past, it is not going past that, it's not going past that line. It's just not happening. So same thing. And you notice, now pay attention. If we shoot up, I just want to point this out since I see this on here. If we're pushing up and it's taking a while for us to get up to that line, understand if it's taking a long time to get to the line, who else sees that? The market makers see it, right? The people who move the market, the big banks, right? If we get there and you notice how you get stuck at a support line or a resistance line, you kind of get stuck at these for a while and keep testing it. And you don't know what it's going to do. Is it going to break through or is it going to turn around and come back? So at this point, when you see something like this, you want to wait till it breaks that line, because we don't know what the market makers are going to do. Because if it's not this took a long time. So if this takes a while to move up, remember they're placing orders. They're actually moving the market, and it's global. So when it's happening, you want to wait, because if I take a buy, but it turns around and it sells, you know, or if I take a sell because I think it's going to bounce off, right? I'm like, oh, it might form a triple top, right? And it keeps bouncing off and then it's going to go down, but instead it went up. So that's just, you want to wait. You start seeing this, you want to wait till you want to either you're going to jump in the trade above, or you're going to wait for it to turn around and then go for that, you know, like I said, it would have been a sell limit. But in this case, it pushed and it bust through. So you always want to make sure these lines are so important. So with that being said, those are my areas of value, right? Those are my areas of value. That's what I'm looking for to effectively enter a trade, right? That's very, very important, because you got your moving averages. You got, and did I even show you? No, it's right after that. Let me share this again. I didn't show you the other one. I wonder how that got mixed up. So want to make sure you understand all three areas of value so you can understand the significance of the tool that you have chosen to utilize. So here we are again. We have, what we're looking at is our moving average on this one. So you got your 200 and this is another moving average, whether it's an 8, a 10, a 50, regardless of what it is. When you see the moving average, the 200, of course, is going to be like the last 200 candles. But when I see a moving average line where I have the line above it, above the 200, I'm looking for a buy. Below the 200, I'm looking for a sell, right? That's what moving averages tell me. But when I look at it and I see that I have a moving average line, I got my 200 and then I have my other moving average, what that tells me, if it's above this, that's a great buy. If it's below this, then that's a great sell. So that's the significance of what you have, right? That's the significance. And as you can see, that's the moving average on the line. So once again, collectively, you can use them collectively and not just individually. So now let me go to the BYOB cash out, right? Let's cash out. I'm gonna tell you why this strategy works so well. Why is it so accurate? Why is it so significant? Now, what you just saw was the 3 areas of value What you just saw was it taking you, what it can do as far as taking you to learn the trade, to learn the trends, to learn the market, right? But imagine, for example, somebody had to learn how to bake a cake, right? Somebody had to learn how to actually bake a cake. So that's what we had to do. So now you can take the BYOB cash out. That's like you learning how to bake a cake just by just grabbing a box cake and adding water. So you don't have to do that heavy lifting that we just talked about. But it's important to understand the why behind the what. It's important to know what you're doing, why it works, how it works, and that's the significance behind that, right? That's the significance. So with the BYOB cash out, you have the stochastic. This is the stochastic, right? And this stochastic is combined and made up of moving averages. So we just talked about what moving averages tell you. Moving averages tell you if I'm gonna take a buy or if I can take a sell, if it's a good trade, if it's going in the right direction, you know, what exactly is it doing? So my stochastic, that's what it's made up of. And so if I know that it's combined and it's made up of that, then what does that tell me? So that's why we know the momentum, right? Remember, if it was above, I'm in a good buy. If it's below, I'm in a good sell. So when I'm sitting here looking at my stochastic and I got the blue line that's at the top, my momentum, I'm overbought, that means I need to sell. So that means this is what my momentum is doing in the market. So, and if I'm at the bottom around at 20, I know that I need to turn around and come back up. So now you understand the momentum of the market. You understand why the stochastic is such an important indicator and such an important tool, because now you're understanding the momentum. However, I can't just go off momentum. This is not on the chart where, this is why all three confirmations are important, because it's not on the chart. It's not where this is. So the strategy is much, oh, yes. Yes, and this definitely will be on YouTube. Yes, it will. So also, now what I'm looking for, remember we were looking for trend. One of my other areas of value was trend. So with my trend, right, with the trend, you're looking for, these are Heikin candles. And I want to be very, very clear. Heikin candles are not on your MetaTrader 4 on your phone. They are not Japanese candles. You will not be able to pull them up. So that's why this tool is so very important. This web analyzer is so very important. Look how crisp and clean, and look at how this looks. So if I take this and I try to do MetaTrader 4 on my computer, it's going to look very different. So look at how smooth it is. When I have a green candle with a flat bottom, I actually now know that I can take a buy. When I have a green candle with a flat top that's red, I know I'm looking for a sell. So to measure the Heikin candles is simply the bigger, the fatter, the nicer the candle is, then I know I have a strong uptrend, right? I know the trend is stronger. So the fatter my candles are, the stronger the trend is. So that's what we're looking for. So that's two areas of value. Remember, I can use them by myself or you can use them collectively. However, I'm not drawing trend lines, right? We didn't draw a trend line. So once again, why do we want all three of them together? Because I know I have a great tool. I know I have great accuracy. I know that I'm actually utilizing all three areas of value. My last area of value is my PSAR, which my support and resistance lines, right? So my PSAR is stop and reversal. It shows when the reversal happens in the market. And so that's why you will hear, did the PSAR flip? Is the dot there? Did the PSAR flip? You know, because that PSAR is that support and resistance. Like you notice with the support and resistance, until the market was ready to make a shift and bounce into the next one, until that happened, we did not go past the support and resistance. The difference is the PSARs flow with the trade. They flow with the candles. So it's a support, shows reversal in the market. So what you have is, you have this, we're definitely getting there. We're definitely getting there. So that's why I was saying in the beginning, this training is gonna build. So if I can't get through everything tonight, this will be part one, and the continuation will be next Tuesday. So we are definitely getting there, because what we're talking about tonight is understanding the BYOB cash out, how it works, the why behind the what, and then also multi-time frame analysis. So, you know, you being able to do the multi-time frame, you know, how do you actually analyze trades and what you're actually looking for. So it's definitely coming. So y'all are actually thinking right, because as I stated, everybody doesn't like the just trading from the 15-minute chart. Everybody does not want to just stay on the 15-minute chart. And that initial, understand the initial BYOB cash out 15 minutes, 10 pips and cash out, that initial is definitely designed for you to be successful. It's designed for you to be in and out the market, but also at the same time, we want you to actually be able to go from 92% to higher. We want you to be able to actually understand the market and execute trades and actually be able to do what you need to do to put yourself in profit, and be able, no matter what you want to do, no matter what currency you want to trade, no matter what time frame you want to be on, if I want to be scalp it significantly, or if I want to sit it out and let it ride for a week or two, I can do that. And you can do that through the analysis and what we're understanding. But it's important for you to understand the foundation. And that's why I started tonight with the foundation. This is the why behind the what. So now you understand the BYOB cash out. Now you understand why the accuracy is there. Now you understand what you're doing. And when you see this, I know I've got my 3 areas of value. And because I have my 3 areas of value, I can properly execute a trade, right? So now we understand that. So when my blue line, that's why my stochastic tells me if I take a buyer and sell, not the potential buyer sell that the web analyzer calls, because the web analyzer scans the market, but it's also a computer system. It's also a computer program, and it's great. I mean, it's phenomenal actually, but because once again, it's about making the simplicity. It's about helping you be better. And so if this is the same tool that the big banks use, this is the same type of tool that major, you know, if I put my money in the bank and I know this is what they're doing with it, and I know I got something comparable, the only thing that makes sense is for me to be my own bank and do it for myself. That's the only thing that makes sense. And so the web analyzer scans the market. The web analyzer does all that heavy lifting for you, so we don't have to think of a currency pair. We don't have to just be on one. We can actually trade anything, right? So, you know, we have our quick tabs, which is Forex, crypto, indices, and we have metals. So now we are not trading tonight. So, so if GBP, NZD, but let me answer your question. Hopefully I want to make sure you see it on the 15-minute, we would not have taken a trade because the candle is not flat. Right, exactly. So if you're looking at one and it's got a wick on the top, we're not taking that trade. And that's why it's important, if you, like, when you guys are out and I'm looking in the chat and I see different things, it's important to know that I'm not trying to analyze it off of what I see on my phone, because what you see on your phone are Japanese candles. And when you're trying to use the Japanese candles, you're actually missing one of the confirmations. So you definitely need the Heikin Ashi candles. So you can use the web analyzer on your phone. You can actually get to the web analyzer on your phone. So that's important to know, right? So here we are. You got your quick tabs for the most common things that we use, but I want to show you something, right? Look, I mean, it's everything that you can ever imagine that you want to do in all the exchanges. So, I mean, everything.
Other people staying there.
Every single thing is here. So you always want to make sure that no matter what your heart desires, now, of course, for you to trade something, it's got to be available on your broker, okay? You got to make sure it's available on your broker site, but anything you want to trade is here. So I don't have to, if I click stocks, right? Look at that, Apple, Tesla, Amazon, Facebook, Netflix, you know, all the companies out there, I don't have to invest in them. I don't have to pray that they rise in value. Look, Starbucks. Everything that you want is actually on here. So if your broker allows it, you can trade it, right? I mean, if your broker allows it, you can trade it. So I'm not going to recommend a broker I'm definitely not recommending a broker. So I just want to keep that in mind. So doesn't this look the same? This Facebook. You're probably on Facebook right now. So doesn't this look the same? That's Facebook. You can trade Facebook. Imagine that. So, but let me go back. So understanding the BYOB cash out from that standpoint, right? Let me go back to the 15-minute chart. So understand this. So I got my blue line that cross over the red. And then the next thing I'm looking for is either I'm looking for my Heikin Ashi candles. So this tells me that I'm looking for a sale. This tells me I'm looking for a sale. And then in turn, once I identify that, then I begin looking for my candles and my piece order line up. So, but my stochastic tells me what I want to trade, just like we were looking at the moving average, right? My moving average, if it was above the 200, I'm looking for a buy. If it's below the 200, I'm looking for a sell, right? So this tells me if it's around the 80, I'm looking for a sell. If it's around the 20, I'm looking for a buy. So you want to make sure that you're within that time frame. You want to make sure that you understand that the stochastic and not anything else. The stochastic is what tells me if I'm looking for a buy or a sell, nothing else. And then now that I know I'm looking for a sale, now I want to start looking for my candles and my PSAR. So next thing, we got a red candle with a flat top. The top has to be flat, right? Has to be flat. And then we wicked out. We got a wick on the top, right? And then we got another wick. So what I'm looking for, once my PSAR flips and all three of my confirmations are there, then I can enter this for a sale. And the same thing for a buy, right? I want to make sure that I started around. Now, of course, look at these candles. These candles are not that fat. They're not that firm, but just to show you that I started around the 20, blue line crossed over the red in a buy position. Then I began looking for my candles, PSAR flip, and now I'm riding this up, right? So this is where I'm at. This is what I'm looking for. So if the candle starts out flat on open, but the candle closes not flat anymore. Okay, now understand, Heikin Ashi candles, Heikin Ashi candles. Heikin Ashi candles form as they are. Let me drop down, right? That one, watch this. Bam, see that? Red is they form. So that's just not strong. It's just not strong. Now for my first one, when I'm doing my first one, I might let it move. If I'm on a 15-minute chart, I let it go about a minute or so to make sure I don't get a wick that pops out of the top. You know, now they sometimes can push down a little bit more, but you'll notice that sometimes when they form, they'll form solid. They'll form, they'll form solid. They will form as they are. So they're not Japanese candles. So if I look at this, right, that Japanese candle, like the one that just formed, this one is probably green. It's probably, let's take a look. What'd I tell you? That it was green, right? That this one was green. And now this is the candle that just formed. And now look at it. It's struggling, right? Do I want to sell or do I want to buy? So that is what Japanese candles look like. Heikin Ashi candles, with Japanese candles, I need to know what's the buyer doing, what's the seller doing, so you're caught up in the middle of them going back and forth. However, it's definitely consolidating, but I'm just trying to point out the difference of the candles. So you're right with that. But what you're seeing is these candles focus on trend. So you don't have to try to figure it out. You don't have to say, okay, this is what's happening or this is what I'm looking for. You know for a fact that this is pushing for a sale. You know for a fact that that's what's happening and that's what this is doing, that it's pushing for a sale and that we got trends. So if I got nice fat candles, let me go back to the 15-minute chart. When I get nice candles that are fat like this, then what that tells me is I got a nice downward trend. But when they start moving and they start, getting smaller and then I start getting wicks, they're not strong. They're not strong. So, right. No, I'm going to recommend now you can use the web analyzer on your phone, but I'm definitely not going to recommend you analyze it from your broker standpoint. You don't use your MetaTrader 4 from your broker standpoint on your phone. And that's just my recommendation. And we back tested it. So I'm just gonna highly recommend that you use the web analyzer or something. You're still gonna have a high accuracy, but you're not gonna get you're not gonna get so. But yes. but you're talking about the web analyzer. So if you get a web analyzer, but I want to emphasize it because I see people using their phones trying to analyze. I'm looking at my phone, and you're not going to get that. So yes, you can definitely use the web analyzer on a tablet, right? So, right. So for example, on the 4th, oh no, you're fine. I want to make sure that's what tonight is all about. Tonight is about making sure that you understand. Tonight is a training call. This is a training call. This is to make sure everybody understands, you know, that's why this is a training call. Would I do that on the fourth candle, on the one that I'm on? Yes. So yes, you would have entered here. So yes, that is correct. No, what we do is every now and then you'll get a trade idea, but what we do with BYOB, what the Be Your Own Bank movement is all about is financially educating. The word in there, educating, financially educating and impacting families. So we want to create fishermen. We want to make sure that that you actually learn the skill set. We don't want you sitting back relying on us. When I've been in many Telegram groups, right? I've seen it and I've done it. And I see so many people, what are you gonna do? Hey, can you give me this? Hey, take this trade, or do I need to take that? What we're doing, and there's nothing wrong. Everybody has their own personalities. Everybody can get what they need, and that's beautiful. So if that's what people are looking for, that's just not what's happening with BYOB. And so what I love is when we look into the group and we look into that chat and I see, hey, who's taking gold? I'm in this trade. I'm doing this. You know, that's been a transition that's taken place since we've been doing this. And so when I see that, and when we see that you are doing this and you get it and you understand it, and the testimonies and people profiting and all of it, that's what moves us. That's what makes this so beautiful and so significant, right? That's what moves us. So yes, you know, we're very excited about the growth. And I just want to emphasize that. I know that's probably a little bit more than what you were asking, but I definitely want to emphasize that we're so focused on education. Okay, so you answered that question. That's great. Right, so where we're going next, so is would I take this trade? And so where we're headed next is awesome. Where we're headed next is to help you understand your multi-time frame analysis. So I see you got questions about multi-time frame, and I see you got questions about this actually feeds me into the multi-time frames. So, I would drop down the time frame, right? And see what's happening. So to answer your question, I will
Can you hear me?
Yes.
Before you go to that time frame, I want you to address the individual who has a question about being in the middle of the 4th candle.
That's what I'm answering right now.
Okay, I didn't get clarity on your answer.
Okay, so when you're looking, so where we are, let me go back then because I want to make sure everybody is with us. So this is that 4th candle. That's where this arrow was placed, on this 4th candle when you're looking for the entry. And so when I'm entering where it looks like I've already surpassed a few candles, right? And had the PSR flipped with this first red candle, then I would have already been in a trade. But as you notice that, as you stated, you would have been looking at the 4th candle for entry. So that's when I mentioned that tonight's call and where we're feeding into is the multi-time frame analysis, right? Multi-time frame analysis. And so just to touch on that, and a part of that is I want to drop down to my 5-minute chart. You can drop down to your lower chart to give you a tighter entry and to understand, because each time frame feeds into the next time frame, right? So understand, everything just happens on the lower time frame first. So now, will you still enter the trade? So here's the arrow where my candle is, right? This is where we are. So look at what's happening. How do you make the determination that this is where we are and what's happening? So how do you make that determination? And that determination is looking at this candle and you see where we are, right? And this is where we were at, where that candle actually happened on a 15-minute chart. So if I'm looking at this and I see that I'm still in a downtrend. So to answer your question in this situation, yes, right? To answer your question in this situation, yes, you could still enter the trade. But it's important for you not to just, when you see that it's halfway through, or you see that the time frame has passed some, or you get there, because sometimes you get there and you actually, even if this would have been a flat top, and sometimes you're looking and I'm on like candle 2 or 3, because I do get that question a lot after, can I still get into the trade? Can I still enter the trade? What you want to do, because remember, none of this is there already. So all we're looking at is this. We don't know what would have actually happened. So I drop down to my 5-minute chart, right? And when I drop down to my 5-minute chart and I see that we're still in a sale, I see that I still have the candle strong, the downtrend is moving down. And so this is what it is. So yes, you will still be able to enter it. So to answer your question, yes, it does. So you would definitely want to go down to the 5-minute chart. So you wanna look at, this is kind of where you want to start looking at those support and resistance lines. But if it's been a few, then you might have to go for 5. But so you want to base it off of what you see. So if I know that if I miss some, right, and it's been a few candles, remember we just talked about support and resistance lines. You know that we're gonna come pretty much down here. So even in this situation, it moved downward, it pulled back a little bit, and then it pushed down. So we're looking, we were at the PSAR might have been on the bottom on the 5-minute chart. Let's see. No, the PSAR was on the top. PSAR is at the top. PSAR is at the top. Now, remember, we did our analysis on the 15-minute chart. We did the analysis on the 15-minute chart, but we dropped down a time frame to see what was doing. Because if I drop down the time frame, right, I'm not looking at the stochastic on the lower time frame. I analyzed from the 15-minute chart, right? My analysis is off of the 15-minute chart because I'm trading off this is the chart I'm trading off of. So my analysis is actually off of my 15-minute chart. The only reason I dropped down to the 5-minute time frame is to see what the trade is still doing, what the trend in the trade is still doing. So if I would have dropped down and it actually would have been let's say I would have been moving for an uptrend, I'm not here to enter the trade. I'm here to see what's moving or what's happening. So I know that I'm still in a downtrend here. So if I'm still in a downtrend, it tells me that I'm still good on the 15-minute chart, because it's going to happen on the 5-minute chart before it happens on the 15-minute chart. It happens on the 5-minute chart before it happens on the 15-minute chart. So if I see that my 5-minute chart has started to turn, it started to go into a buy, then no, I will not enter the trade on the 15-minute chart. But if my 5-minute chart is still in a downward trend, then yes, I enter the trade. So does that clear that up? Does that answer your question? So we might not have enough time to get into the multi-time frame analysis. That's touching on it. Awesome. That's touching on it. That's definitely touching on it. But it's the foundation set. So we've gone through support and resistance. We've gone through all of that. But where we're headed is multi-time frame analysis. And so yes. I mean, so understand, right? Understand. So the answer to your question technically is yes. But understand that the way the strategy is set up with the 92% accuracy, what was tested is being able to say, you know what, I got my 15-minute, I'm on my 15-minute chart. I got my 3 rules and I got my 3 confirmations, and bam, go for it. Yes, all my analysis is off that 15-minute chart. All my analysis is on the 15-minute chart. So this is definitely going to feed in a multi-time frame. So I definitely want to help you understand. But yes, Latasha, to answer your question, technically, yes, you can do that for extra confirmation, but it's built off of the 15. And so as we move into the multi-time frame analysis, this is going to get a lot clearer for you. It's going to make a lot more sense. But I wanted to take my time with it because I want to make sure that everybody on this call understands it. I want to make sure that you get why this works, how it works, how I can trade. If I want to trade on the hour or the 4 hour, how can I do that? If I want to be on the 15, how can I do that? What's my personality type? What's my style? How can I take this to the next level, right? And that's what this is designed to do. But understand that each time frame has its own stochastic. Each time frame has its own information. And each time frame, where we're headed is understanding that from the 1 minute, right, to the 5 minute. So if I'm looking at this, the 1 minute to the 5 minute to the 15 minute to the 30 minute to the 1 hour, each one feeds into the next one. So each one definitely feeds into the next one. And so if I'm, this doesn't get affected by, if I'm on the higher time frames, it's not going to get as affected by, what's happening, so much stuff shifting the market. It can handle it more, but understand that you're holding the trade longer and you're going to see push for profit, pullback, push for profit, pullback. And all of that market correction and all of that pullback is what's happening on those lower time frames, right? Because on my 1 minute, it's got to cycle through its moving average. It's got to cycle through its stochastic. My 5 minute is going to cycle through its momentum. My 15 is going to cycle through its own momentum. So all of that momentum is rolling into those higher time frames. So it's just moving and rolling into the higher time frame. So if I come on a 4 hour, right? And if I come on a 4 hour, actually, let me do this on the hour. And to answer your question, if you are in a Facebook group, BYOB Cashout, yes, there is a cheat sheet. There's a checklist that's actually pinned in there. So yes, it is. And it's definitely in there. And if you look at the pictures there, so there's 2 versions of it. It's one Word document where it types everything out. And then it's a quick, easy cheat sheet of 1, 2, 3, easiest 1, 2, 3. That's posted in there as a picture. But the one that's pinned is the Word document, and then you have the other one that's in there. So what you're seeing right here, what you're looking at, oh, you're welcome, is, so I have my uptrend, right? And if you notice, you look at what we just looked at. So doesn't that PSAR look like a trend line to a certain extent? Look at it, how it moves with the candles. But also know that we have something called impulse, correction, continuation, correction, continuation, correction, continuation, correction, continuation, right? Now, what this correction is, okay, I'm on an hour time frame. What this correction is, I'm gonna put this around it, right? Or do I need, yeah. Oh, how far over am I? Because when we go drop down time frames, we're gonna have some significant moving to do. So what this correction is what's happening on the lower time frames, right? That's what this correction is. So if I drop down some time frames, right? You see what's happening? This is where we are on the lower time frames. If I drop down some more, can we find it? Here we go. So it's what's happening on those lower time frames. And now, as you can see, these stochastics measure up with the correction, okay? Because this is the momentum that's happening on those lower time frames. So each one actually is going to be doing its own thing. So when we go back to looking at what we were just looking at, right? You tell me I came over too far? Okay, so when I go back to what I'm looking at, do you see I'm looking at the chart. I don't see the CSA chart. So does anybody else see, do you see the chart or do you see CSA? Okay, you and me? Okay, great. So I just wanted to make sure because I know it'll do some crazy stuff. So what we're looking at is, so what you saw is what it looked like on the lower time frames. And that's this market correction, right? That's what this is. So this is kind of what we were talking about, where I wouldn't want to get in a trade right here, because even though I got, of course, technically, let's look at this one. I wouldn't want to get in a trade. Yeah, let's look at this one up here, because this one, the parameters kind of line up. So I wouldn't want to get in a trade when I'm looking at a chart and I have an obvious uptrend. And what we were just talking about is trading a correction. You can technically trade correction, but this is a strong uptrend, right? So if I know if I'm in a strong uptrend or if I'm in a strong downtrend, what I don't want to do is trade the correction. So this would end up falling in that 8% some of the time. Sometimes you'll get your 10 pips. A lot of the times you won't, because my trend is so strong. And if my trend is strong, you see my stochastic lines up, right? It lines up. I got a red candle with a flat top, but I don't even have a PSAR until it get way down here. And so that's what we were talking about, dropping down time frames, validating. But my eyesight can tell me, guess what? I'm in a strong uptrend. Look at that. So what I'll do is I'll wait, because I'm looking for entry triggers. And so I'll wait until it turns, and then I give that push back up. So, and that's when I would want to get in a trade. Stochastic around the 20, keyword around, stochastic around the 20, and it begins moving up. And now I have my, see how we didn't have to figure it out with the other areas of value and drawing trend lines and doing all this. We didn't have to do any of that. All you had to do was add water. And by understanding my 3 confirmations, my stochastic moving upward, I have my Heikin Ashi candle, my green candle with a flat bottom, and I got my PSAR flip. All 3 of those line up, and I know, because I'm looking at this, I can see it's moving up, right? Anybody, whether you've never taken a trade in your life, or you started trading, you've been trading for over a year, 5 years, you can tell that this is an uptrend. You can tell it's moving upwards. So that when I see that, I don't want to trade the correction. I wait, and when it pulls back around, I know I got a nice solid uptrend. And that is what this is the BYOB cash out in its simplicity. So now you know the why behind the what. You got the why behind the what. So next Tuesday, we're going to be looking at multi-time frame analysis. So we're going to be comparing time frames to where you can say, okay, I want to trade on the hour. Let me check. Let me make sure I got my confluence. Let me make sure that all my stuff is running together. So this is what that means. And you want to make sure that you understand multi-time frame analysis so you can trade. It helps on the lower time frame. It helps on the higher time frames. It helps all the way across the board. So before we transition this call, Mr. Rogers, do you have anything that you want to share?
Absolutely. Fantastic, folks. If this was amazing information, and I don't care how long you've been in this setting, can we just salute the likes of the trade whisperer herself, Ms. Tasha and Dyer? If you've gotten tremendous value on this, please put a 777 in the chat. If this, yes, absolutely. And this is the heartbeat of why we do what we do. We want you to be so empowered that you'll be able to take a look at these charts, no matter what it is, and understand the dynamic of being your own bank. So once again, 777 in the chat. If you know, this is how and why you're so effective. And we thank God that God blessed her mind to make this strategy to capture all 3 areas in which the traditional trend line, support, resistance line, and the moving averages, and to be able to encapsulate that all in one trade. Big shout out to the trade whisperer regarding that. So I just wanted to add that commentary, and we appreciate you for what you do and the lives and the people that you're changing, because your selflessness are willing to serve other people. So once again, kudos to you.
Ms. Dyer, this is Kelvin Pittman too. I just want to say thank you for being so patient also and being so loyal. I've been around a short time, but I definitely see how your patience is because, you know, me personally, it gets a little frustrating, but thank you for being so patient and loyal to the process. And I see the tremendous change as far as numbers. You know, it was 90-something people on this call today, you know, now I was around when it was maybe 3 or 4, you know, 8. But I just want to say thank you for your patience and your loyalty also. Thank you.
Oh, wow, thank you so much. It's my pleasure, and just know that this is God breathed. This is definitely God. So when you're doing what He called you to do, I'm just a vessel. I'm the vessel for Him to reach the people, the masses, and so I'm definitely grateful that He chose me, and I'm just grateful. I'm just very grateful for what He's doing and how this strategy is reaching the masses, and we're actually worldwide. So BYOB worldwide, I'm excited about what we're doing. So quick question, I'll answer this last question and then I have to transition this call.